Hello and good afternoon. Welcome to the Everyday Trades Aftermarket Trade Recap. This is Arthur with Everyday Trades. Today is Monday, July 27th, and we are going to look at two trade setups that I took today, one on QSR and the other on SPY. Then we'll take a look at some stocks that may be gapping tomorrow. So stay tuned, don't go anywhere. We'll be right back right after this. Okay, so we're going to look at both QSR and SPY and the trade setups that I took. But first and foremost, I want to mention that these trades were taken as virtual trades. They were not executed in a live market. In a live market, the overall outcome can and oftentimes will be significantly different than trading in a virtual environment. Okay, so let's take a look at my first trade today, which was QSR. And this is a daily chart. And for those of you who are not familiar with charts, this is a daily chart, and each one of these bars represent 1 day of trading. And this over here, where my cursor is, this is today's bar. And this red line here is actually where it opened and actually where it closed today, so it made this perfect little high wave doji. And we can see that the stock gapped up right over this pivot to a nice location, and we have a little bit of congestion over here to the left, but I really liked the gap. I thought it gapped to a nice location and gave us a couple solid targets to trade to with these well-defined pivots around 42.40 or so. We can also take a look at it on the weekly, where each one of these bars represents 1 week worth of trading, and we can see that it gapped up over the previous few weeks trading here to this nice little area here and kind of void in the chart. And again, we can see some well-defined predominant pivots and targets to trade to as well on the weekly. So let's move over to the 2-minute chart, which was the time frame that the trade was taken on. And what that means is that each one of these bars represents 2 minutes of trading as well. So let me activate my drawing tools here. So this is an explanation of the numbers for the trade. This purple line with this arrow here is the stop for my trade, and this blue line represents the entry where the trade was taken. This green line is my profit target, and the trade was long 42.06 with a stop at 41.86. So you can see the blue line is just right over the top of this right over the high of this candle here, 2 cents above the high. And I put the stop 2 cents below of this candle as well. And we had this little doji candle, or actually a big big doji candle with a long lower wick. And this next candle was a bearish little inside day candle. And to me, this represents a bullish reversal sign right at a reversal time early in the morning. And we can also see that we had the 8 exponential moving average also coming right in to give us some support as well. So on this candle here is where we got triggered in, and again the trade was 42.06 by 41.86. So that is a 20-cent stop with a $50 R, which is the amount that I risk on every trade that I take, and the R stands for risk unit. A $50 R divided by my stop value, which was 20 cents, gives me a total of 250 shares that I bought. From there, we calculate our target, where we want the stock to trade to, and that to our target with a 1 to 2 risk. So we're risking 1R in order to make 2. So we have a 2-to-1 reward to risk. So that target is twice the amount of my stop. So with a 20-cent stop, we're shooting for 40 cents. So 40 cents plus the entry of 42.06 gives us a target of 42.46, and that's illustrated by this green line and this green arrow right there. So as we can see, we got triggered in right on this bar here. We traded up. We came into this little stair-step pattern here, which is just a continuation pattern, and we broke that. And I almost immediately, once we started trading up, I moved my stop up to this black line here, which is 41.93 to mitigate some risk, just in case the trade turned around and went against me and then hit my stop. I wouldn't lose a full R, and we take some of the risk right off the table. As we continue to trade up, I moved my stop just right underneath the low of this stair-step continuation pattern to 42.16. We broke through, traded up, traded sideways for a little bit, and then ultimately hit our target right on this candle here where the black arrow was pointing, which was the 42.06. Now when we hit our 2R targets, I always sell half of my position. So I had 250 shares. I sold 125 shares at my target, my 2R target, which is 42.46. And then from there we trail on pivots and by the original amount of our stop. So right when I took profits, we got this bar here, which is a bearish candle, bearish engulfing candle as well, and created this long upper wick or upper shadow. And so I immediately put my stop right underneath this when I saw this little pattern forming, and I decided to take another fourth at that same target. So I had a total of 187 shares out at 42.46, and I had 1/4 of my shares remaining, which were 63 shares. And as we continued to trade up, I just continued to trail by pivots, and my ultimate stop was 42.63. We traded up and then traded down a little bit, and this is where I eventually trailed out of the stop at 42.64. And that was a pretty good place to trail out when you have this big candle like this. You know, what do you have to expect? You expect the trade to continue bearish, so you want to trail out at the best position possible, right? The most reasonable position and price possible to maximize your profits and mitigate your risk. And so that's what I did, and we can see here that the stock traded up a little bit, and then ultimately, if I switch to the 5-minute, give you a little bigger time frame here, we can see that the stock ultimately just traded down, a little back up, and then just kind of pitter-pattered around for the rest of the day there. So we got out at a pretty good location. And the total of that trade was a 2.2R trade. So that was a great trade. The next trade was on SPY. And this is a 15-minute chart here. And the short entry on SPY was 206.74, which is this blue line here, which was right underneath the lows of these candles, which created this little base. And the stop was 207.05, which is this purple candle, or excuse me, this purple line, which goes right over the top of this little pivot here. Now initially my stop was going to be 207.17, but we created this little pivot and started to trade down, so I went ahead and used my 207.05 stop, and we were triggered into the trade on this candle here right at 9:45, and that trade, which was 206.74 by 207.05, was a 31-cent stop, and with a $50 R, which is the amount that I risk for every trade, $50 divided by the 31 cents, which was my stop value, is 161 shares that I shorted on SPY. Now a 1-to-2 risk to reward gives me a 2R target of 206.15, and this green line here is the target for my 2R. And as you can see, we never even came close to hitting this. After I was triggered into the trade on this candle here, we retested the entry, broke through, and started to trade right back up. And I decided to move my stop down to 206.89. And originally thought after I moved the stop down that I was actually going to move it back up a little bit and go with the original risk that I was going to take on the trade, but inevitably went ahead and just kind of trailed out and stopped out for a small loss of half an hour at 206.89. So we got QSR, which is a 2.2 R gain, and SPY, which is half an hour loss. So two trades, not bad at all. So it was a relatively good day trading, and those were the only two trades I took today. There was a lot of other trades that had some setups that looked okay to trade, but nothing really met my trading plan. There was a few things that looked good, that had some nice risk to reward, but I didn't want to get reckless and take something that wasn't a typical setup that's part of my trading plan that I take every single day when it sets up, no matter what. So I decided to not be reckless and be disciplined, and that's what it's all about. Let's take a look at some stocks that may be gapping for tomorrow. Specifically, we're going to take a look at some stocks that are reporting earnings. So the first stock on the watch list that I found was Ford, and if anybody's wondering where I found these stocks that are reporting earnings, I just use a free site. It's Finvizcom. You can create a username and a password, log in, and you can set some predefined settings. I only trade stocks that trade typically over 1 million shares, minimum 750,000 shares, daily basis, average 3 months, and must be minimum over $5 a share, typically 10 or even preferably over $20 a share as well. And you can also sort through on Finviz, and I just sort through by the stocks that are by those filters and that are reporting earnings for tomorrow before. And there's also some stocks that are reporting tomorrow after the bell, like Twitter, GILD, ESRX, Yelp, SPWR. But in the interest of keeping this video short and relatively bearable, we're going to go ahead and hold off on going over all of those and just cover a few that are gapping or that are reporting earnings before tomorrow's opening bell. So Ford is the first one, F. Let's take a look at it on the daily. So Ford looks like it closed at 14.55 here, and this last candle is the current day here. So looking at Ford, if we were looking to trade a gap, I've already predefined some areas that I'd like to see a gap. So if a gap's down, something under 14.19 would be a nice. It'd actually be a gap and go trade. So something that we can take right off the bat, and then we'll take a look at the hourly time frame, and we can see that the last few hours of today's trading session, which the market just closed, we had some relatively large wide range bullish bars with a lot of bullish volume, meaning that there are a lot of traders that are going to be trapped in this trade, in this stock, if the stock gaps down tomorrow at the open. So if it gaps down underneath 14.19, I'd definitely be interested. If it gaps up, I'd definitely be interested in something over 14.90. Just right over these two little pivots here. That would be definitely something that would catch my eye and be interesting. Or even if it were just to change the whole entire landscape of this chart and gap over about 15.69. So we'll keep an eye on that stock for tomorrow. Let's take a look at PFE, Pfizer. The stock closed up today. So if it were to gap down, even a close, well, let's look at this pivot here. So if it were to gap down somewhere around 33, under 33, I'd definitely be interested in it. Definitely be a gap and go on the daily, and there's going to be some traders trapped in there intraday on the hourly and the 30-minute as well. So if that gap down underneath this pivot, that'd be great. I would also be interested in a gap underneath today's close, and we'll take a look at the hourly. So as we can see here, this was the first hour of the trading session, was traded down, and then we just traded right back up, and a lot of bullish volume, big wide range bullish bars. Again, a lot of traders will be trapped in that. So if we gap below 33, definitely be interested in that. Great gap. And if we gap below 33.86, which the low of today's first trading hour was 33.89, definitely be interested in this area as well. Now, if it was the gap up, something around this area here, which is around 35.45, above this pivot, above these pivots, or just around this general location would be perfectly fine. Would be a retest gap. A lot of bullish volume today. A lot of traders already in long. So we'll definitely wait at least 30 minutes to see what the stock does, and then kind of assess and go with the game plan from there. MRK. So if the stock right now closed at 56.99, if the stock does gap up, I would definitely like to see a gap up around 59.25, just above these two pivots here, or even a gap up over 61. That would definitely be a large gap, but we'll have to see where it opens up tomorrow. If it does gap up, preferably over this pivot is definitely where I'd be looking to take a long trade. It would be a gap and go. Looking at the daily chart, it would be a retest gap. Looking at the hourly chart, today, the last hour of the trading session was a bearish candle, but there definitely is some bullish traders that are trapped in there. Well, not bullish traders that are trapped. If it gaps down, bullish traders would be trapped, but it would be a retest on the daily. But if it gaps up, it will also be a retest based on the daily and the hourly. And if we gap down, definitely be looking at an area around 56.03 underneath these pivots, or even something along the lines of 55.52. Let's take a look at JetBlue. Now, JetBlue reporting earnings tomorrow before the open. We have 3 bearish daily candles in a row. Looking at today's daily candle, you could tell that the last trading hours of the day had some bullish sentiment to it and just formed a nice little doji candle today. If we gap up, it will be a gap and go on the daily. Looking at the hourly, it will be a retest, so we'll most likely wait to about 35 minutes into the trading session to assess and trade our plan for what that stock's going to do. If it does gap down, I wouldn't mind a gap under 21.30 or so. I like that on the daily, kind of gets underneath this little pivot here, as well as this pivot here, which is acting as a support, as you can see here, as well as this pivots here. So we'd be right underneath both of those pivots. Looking at the weekly, also has a nice look to it. On the weekly, we formed this evening star reversal candle with the long upper wick, which is what I mentioned. If we gap up over, would be a nice gap and go on the daily, but overall retest gap. And if we do gap down underneath the previous 2 weeks, that would be a nice retest gap as well. So that's JetBlue. Let's take a look at GRUB. So GRUB, a bearish candle today. Looks like we did have some bullish buying pressure coming in towards the end of the day. If we were to gap up tomorrow, it would be a gap and go on the daily, and I would like to see something just over this pivot here, or maybe even this pivot up here at about 36.40. That's kind of pushing it though. But right over this pivot would be a great location. Looking at the hourly, that would ultimately be a retest gap, which is how we'd play it. So we'd wait at least 30 minutes, reassess the gap, wait for the retest, and then go from there and trade our plan. If we do gap down, I would like to see something underneath these two wicks here. Underneath the wick of the second of this month and underneath today's candle. And as you can see, GRUB, there's not much data on here, and there's nothing underneath this, nothing holding up, and that would be a retest gap. So again, we wait at least 30 minutes, wait for the retest, assess the trading plan, and measure that, and then go from there. Let's take a look at DHI. DHI, if we do gap up, I wouldn't mind something over these three pivots areas, something over 28.77, or even this pivot area here, which is 29.42, give or take. That would be a retest gap as well. So again, we'd wait at least 30 minutes, assess what the stock's doing, give that enough time to retest, and then wait for the perfect setup, and then go from there. If it does gap down, that would be a gap and go on the daily, gapping to a great location on the daily. Really nothing in the way to the left, somewhat of a void here. Give us some clear pivots and clear targets to trade to. Something around, first target, 23.34, and we can even expect another target of, say, 22.62. So that'd be a relatively big bearish day on DHI tomorrow. So we'll definitely keep an eye on that one, and we'll see what that one does when the stock market opens. MAS, let's take a look at that. As you can tell, stock's been in quite a big run-up, gap down, traded down, kind of retested, broke through the lows, and retested all the way up and actually set a new high. And you can see where we stand today. And this trade, realistically, this thing can go either way. If it does gap up, I would like to see a gap up over this wick from the 23rd. High this wick is 24.52, so anything over that would be a nice bullish trade. That would be a gap and go. Let's take a look at it on the hourly. On the hourly would be a retest gap. So most likely we'll wait about 30 minutes, allow that to do its thing, allow that to retest, assess what the stock's doing, find the right setup, and then go from there. If the stock does gap down, I'd like to see a gap down underneath these pivots here. Again, there's a lot over here to the left, but nothing really over here to the immediate left. So not too worried about that location. Just gonna be looking for the right setup. That is a retest gap as well, formed a nice little doji today. So again, we can kind of go either way with this one. Most likely we're gonna wait at least 30 minutes into the market open, allow it to do its thing, give it enough time to retest, assess what the plan is doing, wait for the perfect entry, and then go from there. So we'll keep an eye on MAS, see what MAS does tomorrow on the open. And the last but not least is UPS. UPS, if it does gap up, I'd like to see a gap up above this pivot here, which is 98.97 area, or an even bigger gap up, which would significantly change the entire layout of this chart. And that area would be around 103.29, so that'd be a really significant gap up. Both gaps on the daily are a retest gap, so again, we're going to wait, give or take, about 30 minutes. Allow it enough time to retest, find the perfect entry, assess what the stock is doing, and trade our plan and go from there. If it does gap down, I'd like to see a gap under these pivots here, and even if we were to clear this pivot here, which would be great and give us a clear area to trade to. Who knows, this thing could run to potentially 88, 82, which would be quite a bearish day, but any stock can do anything. And on the daily, this is a gap and go. Let's take a look at it on the hourly. Excuse me. We can see that the last couple hours of the trading day were two relatively small but yet very bearish or excuse me, a very bullish, a lot of significant bullish volume coming in. The overall day was relatively bullish, so there's going to be a lot of long bullish traders trapped in this stock. So when the stock does open up, if it does open up under that pivot, and actually, I tell you the truth, I wouldn't mind just an open right underneath, today's low. I mean, that actually wouldn't look too bad either. We could play on that. Still give us enough room to run through as well. So even a low underneath, even a gap and open underneath today's low would be perfectly fine with me. Be looking to take the gap and go trade on that, maybe even right out of the gate. All right, so today we took a look at the two trades that I took today on QSR, on SPY, and then we looked at about 6 or 7 other stocks that may be gapping tomorrow at the open, that are reporting earnings before the open. So we definitely got a lot to keep our eye on tomorrow. So thank you all for watching my video. Thank you for your time. If you guys have any questions or comments, please feel free to leave those down below. If you have any questions that you'd like to ask me directly, you can send me an email at arthur@everydaytrades.com. And before you leave, don't forget to subscribe to my channel. Thank you and have a great day.